I was always an accidental banker. Nearly 20 years at a large bank, which I'm sure we're paying.
Yeah, so sorry about that. We went there already. And what would you say is the biggest difference between the institutional side of tokenization versus the retail, kind of more crypto native side that maybe people don't understand?
The thing that the institutions bring to this industry is an understanding of regulation, risk, control, kind of DeFi space is, speed, transparency. You've got the best of both worlds.
Where do you see we are now on that tokenization journey?
We've made a lot of progress. What you guys are building is a great example of that. We've identified an opportunity or a need, region that's receptive to this, and suddenly you can build an actual business. Can you imagine building the business that you're building and also running an actual blockchain?
No, I cannot. No, I cannot. I don't want to either. Yeah.
Exactly.
We might look like idiots, in 6 months' time, but doing what we said we would do. If we get something right, we get something right. If we get something wrong, we get it wrong, but we say it how it is. And the minute we stop learning and think we know it all, that's when we fail.
And looking like idiots, I think, is part of the entrepreneurial journey, right?
Absolutely.
We all have
it never ends. It never
have to go through that, yeah. People who come into this space and they want to make a quick buck. Really, the aim is just to pump the value of the coin attached to that chain, right? That we need to leave behind.
What are your views for the next 12 months?
Massively bullish on both. We are just at the foothills. The big banks here are now moving.
Yeah, they're going for it, getting licensed, getting ready.
What you guys have done is leading the way. And now the question is, can these markets scale?
Welcome back to the #1 prop tech podcast in the UAE. I'm Gary, co-founder and CEO of Tribe, and I'm delighted to have another very special guest alongside me today. I will not do his introduction justice, so I'll allow him to do it for him. But please stay tuned. We're going to be talking about some very exciting topics. So welcome, Adam, to Block by Block.
Thank you very much.
I will allow you to introduce yourself.
Cool. Thank you. Lovely to be here. Thanks for having me. I'm Adam. I'm the CEO of SettleMint. I'll keep it nice and short.
Very good. So we're going to talk about how you're a recovering X, and we're going to talk about X later on, so I don't trigger myself. But you mentioned you're the CEO at SettleMint. And was it June last year that you took that role? Prior to that, you were CFO, if I'm not mistaken. And you moved to Dubai for the CEO role at SettleMint. So what was your conviction in stepping up from CFO to CEO and moving to Dubai for the role?
Yeah, sure. So I'd spent 20 years, nearly 20 years at a large bank, which I'll show by the name. So sorry about that.
We went there already.
And in that journey, in the last few years, I was one of the few people that was leading that particular bank's journey into digital assets. And I had come across SettleMint in that journey. Had actually wanted to invest in the business from the bank at the time. Couldn't quite get there. Nothing to do with the business, but the sort of investment mandate that we had was quite restrictive. Got to know the founders. Really liked the business at the time, which was around sort of 2020. And then as I was leaving, they gave me a call and said, "Hey, come and join us. We need and would like somebody like you to help us kind of on the next phase of where we want to go." So yeah, was delighted to join. As you said, initially joined as the CFO. There's a couple of things actually after I joined became very, very clear to me. One was that the technology was even better than I had remembered, and it sort of come on leaps and bounds. But also that the business had got, let's say, like a little bit ahead of itself and needed to be repositioned, some restructuring, some refocusing. So we did that. We repositioned the business quite aggressively over the first sort of 6 to 9 months, and then in that process, the co-founders and the investors asked me to take over as CEO, which I was happy to do. Both Matthew and Roderick, our co-founders, are still very much in the business and central to it, but we just kind of moved the deck chairs a little bit and made sure that we were playing to our strengths.
So we obviously the purpose of Block by Block is to talk about building a startup or building a venture in this space. So whether this space is virtual assets, whether it's tokenization, real estate, or just the tech startup ecosystem in general, because it's still pretty nascent compared to more established startup or venture markets in places like the US or Europe. that must have been quite a leap of faith for you, going from 20 years in kind of corporate or banking, very, TradFi, as it's kind of lovingly referred to in our space. How did you prepare yourself to take that leap from very structured, very corporate environment to quite the opposite?
Yeah. So I guess the first thing is I was always an accidental banker. I never sort of set out. I wasn't born thinking I wanted to become a banker, but the particular bank that I was at just offered great opportunities to learn, great exposure, great opportunities to travel to different markets, pick up different skills and so on. So 17, 18 years later, I kind of opened my eyes and said, oh my God, I've been a banker,
Well,
right?
yeah.
But I'd say the last 5 or 6 years at the bank, I was already starting to take steps. One, that the next phase of my career was likely to be outside of the bank. Number two, that I was getting more involved in new technologies. So I ran a small team at the bank that was doing investing into fintechs. So it was, when I then came to the end of my time at the bank, it was a very natural step to sort of step into a small fintech. Now, that's not to say it's not a huge change and very challenging, and it's definitely been a bit of a culture shock in many ways, for sure. But the direction was always this way, and I think I've got a sort of entrepreneurialism in my DNA, right? So yes, I spent a lot of time in the bank, but every 2 or 3 years I would do something else. I'd move on. I'd look to gain new skills and insights and so on. So it was, in some ways, not as
You were ready for it.
yeah, not as big a transition.
And conversely, how big was the SettleMint team when you stepped in? How many?
Yeah, so there was about 50 people.
50.
We were sort of 2 years post Series A. So it was a pretty well-established business.
But still a startup. So how did they absorb you? Like, how, I can imagine if someone from a bank came and joined the Tribe team today, well, I'd first of all be the biggest skeptic.
Yeah.
How did they react to you joining from, not within the ecosystem, if you will?
Yeah, sure. So I had been in the ecosystem. I was doing digital asset investments. I was known to them. So I think that helped. And then, Matthew and Roderick, our co-founders, and they're just incredibly humble people as well, right? And if you then approach it with a humility that, I think they had realized they got the business to a certain place, but you needed to then add skill sets, add experience to help get it to the next phase. And as long as you come in with the humility of understanding, what it took to get from 0 to 1, which, by the way, I don't have that in me, right? Like I can imagine, right? Like I have a lot of respect for anybody that takes that leap, right? Now, where I think I can add value is that sort of 1 to 10. So it's, as long as you do it with humility on all sides, I think it can work.
Yeah, and big credit to the founders, and I guess in this respect, by being able to acknowledge either their blind spots or their weak spots, or where they just weren't able to kick the business on to the next gear.
Yeah,
because not many founders have that at that stage.
Definitely. And look, to be fair to them, they saw the potential of this technology extremely early, right? Like they stepped out and established SettleMint in 2016, right? Ethereum was launched in 2015, right? So, and it's taken big banks, 10 years to get comfortable with this technology, and they stepped out right at the beginning. So kudos for even surviving, right? Number one.
Absolutely, yeah.
And then, as you say, sort of realizing actually we need to add to the skill set, and it wasn't just me, it's others as well, to help, take this business, propel this business from 1 to 10.
So we've mentioned SettleMint a number of times, but we haven't actually talked about what it is.
Sure.
So give me, the shortest or most concise version of what SettleMint is before we dive into detail later on.
Yeah, sure. So we provide the infrastructure to institutions to launch and manage digital assets. And we focus primarily on large regulated institutions. We do that globally. So we've got clients all the way from North America through to Japan. And as I say, we sort of focus on the issuance, so the tokenization side of things, but then also managing the life cycle of those assets through our capabilities that we give to these institutions.
And what would you say, again, on the highest level, is the biggest difference between the institutional side of tokenization or digital assets versus the retail kind of more crypto native side that maybe people don't understand or just completely miss?
Yeah, so I think the thing that the institutions bring to this industry is an understanding of regulation, an understanding of risk, an understanding of control, and all those good and boring things in some ways, right? But those are the things you need if you want to scale an industry at the institutional level, globally. So that's what they bring. Now, what I think the kind of DeFi space that where this all started brings is, obviously speed, being able to build quickly, transparency. And so what you've got now is an increasing convergence of the two, which is exciting because you've got the best of both worlds, and that's going to really unlock the power of the technology.
And obviously, let's kind of continue to hone in on tokenization. That's obviously Tribe's focus, real estate in the GCC, certainly Dubai and Qatar for us, or yes, Dubai and Doha, I guess more specifically in a city sense. Hopefully Saudi in the not too distant future, and I'm sure we'll talk about that. But tokenization was more of a headline even just 2 years ago than it was an actual substance, if you will. There was a lack thereof, lack of players, lack of regulatory enablement, lack of institutional funding and investment. Where do you see we are now on that tokenization journey? You said earlier before we started, we have kind of launch velocity. What's been built and what is missing in that space, do you think?
Yeah, so I think we've made, as an industry, a lot of progress, particularly in the last couple of years. But I would say we're still very much at the foothills of this in terms of where it's going to go, right? So in terms of, what's been built, you've got certain use cases which are starting to be viable businesses end to end. So what you guys are building is a great example of that, right? You've identified an opportunity or a need. You've identified a sector. You've identified a region that's receptive to this, and suddenly you can build an actual business, right, based on this technology, which is super cool. And we're seeing that emergence globally, but it's moving at slightly different speeds, and every institution is approaching this in a slightly different way, using different use cases to as places to start. So, if I think about where we were a couple of years ago, and just the notion of tokenization is powerful, right? Because it's something that has allowed people that are not in this industry to actually start to understand what's happening here with the technology, right? But tokenization is just the beginning, right? If you think about the process of managing digital assets, right? You can tokenize something, i.e. you take an asset and you put it on chain, but what do you then do with it, right? So it's I think a lot of progress made, but this is just the beginning of where we're going.
I completely agree. You mentioned places around the world that are looking or starting to move. We feel that things are moving quite quickly here in Dubai, specifically, thanks to Vara, Qatar as well, thanks to QFC, obviously Saudi with the work you guys are doing. Outside of those three kind of GCC kind of anchor points, where else globally do you see there being not just eyeballs, but movement?
Yeah, so certainly Southeast Asia. So Singapore, we've had major clients there for quite some time now, and we see them moving from one use case through to 2, 3, 4, 5 now in production, real life businesses, right? We've seen a lot of movement recently in Malaysia. So the Malaysian market is opening up to this technology in a major way. Hong Kong, obviously, as well, particularly with stablecoins and the issuance licenses there recently. I'd say London is starting to catch up a bit for sure. But when they come, it'll be a serious. Obviously the depth of the capital markets there. So we're seeing encouraging signs there, and then obviously the US, right, with this particular administration, coming in. There's been a lot of tailwinds there in the US as well.
Given that you're institutional focused, whether that's banks, funds, regulators, governments, even, I'm sure there's a degree now, given how, you said that it was established 10, 11 years ago. I guess there's a degree of inbound requests that come your way. And when they do, whether it's a fund, a bank, government entity, whatever, and they say, help us tokenize this, how do you manage that conversation? Like you said, it's a simple concept, but the reality is much different. How do you try and bridge the delta, in that first conversation?
Yeah, so those requests are also on a spectrum, right? So we have, banks or asset managers or funds, government institutions come to us. They know exactly what they want to do.
Yeah.
They've thought about it. They've done POCs. They've got their risk committee is comfortable. The tech, they know exactly what they want to do. They've got a business case and they know the market. They've researched us, and it's a relatively straightforward conversation from there, right? So we have that. And then on the other end of the spectrum, it's exactly like you say, hey, we know we want to do something in tokenization. We know we need to get onto this train.
Yeah.
But we're not quite sure how and when and what, and can you help us with that? Yeah. And look, both are valid, right? And we're happy to help, on either end of that spectrum. But yeah, there is still very much a spectrum, which also tells you that there are still, there's an avant-garde that's moving, increasingly at pace and scale. And then there are people who are a little bit further behind in the adoption of this technology.
Yeah. And for me, that's part of the fun, part of the excitement is that there are so many entities, government entities, regulators, businesses, and people that haven't even given it a second thought yet. And like you say, once that does start to go, when the big boys enter the, step on the dance floor, the Londons, the New Yorks of the world, then it's going to be incredibly exciting.
I agree.
One of the things I saw from kind of looking at SettleMint and other kind of similar players in the institutional space is this term sovereign grade infrastructure. Is that a term that's been coined by yourselves or others to kind of give government entities, in this particular part of the world, the safety net in what has otherwise been quite a murky, industry, Web3 space where they could get their fingers burnt and their sovereign dollars, burnt in the process, or what?
No. I think it's to do with. There's kind of two parts to it. One is if you're doing something at a national scale, obviously you have to have a technology which can withstand that.
Yep.
Right. So whether it's from a security perspective or compliance perspective or reliability perspective. You need to have that sort of sovereign grade, right? In that regard. So I think there's that aspect to it. So it's about can the technology operate at real scale in a regulated environment? And then the second piece is governments, but also other large institutions will want to own this stuff, right? Like they want to build it themselves, have the tools. And what they're not going to, no self-respecting government or large financial institution is going to want to lock themselves into a particular provider or a particular vendor, right? They're going to want to build it in-house, build the capability in-house. So that's also, I think, the second kind of dimension of sovereign grade. Is another way of saying institutional grade.
Gotcha. Yeah. Well, good to know. This is a learning journey for all of us. Yeah, so you moved to Dubai a year ago?
Yeah, in August last year.
What's a review of your first year, here, both from a, other than the obvious, and that's the shit of the last 2 or 3 months that's happened around us. What's your view of the market, regulators, capital flows, what makes Dubai for you?
Yeah, so I don't regret the decision for a second, both from a business perspective and a personal perspective.
Good.
So there's both sides.
Despite everything that's gone on.
Yeah, despite everything. I mean, look, obviously, what's happened is a bit unfortunate, to say the least. But I strongly believe that this is just going to be a blip, right, on the trajectory of Dubai and the UAE and the region as a whole. Yeah, it's a very unique place, right? I mean, this is why I'm sure you're here building here as well. It's if I think about, Cormac and I were talking earlier, if I think about the relationship with the regulators that, the business community here has, incredible, right? It's a real partnership.
Definitely.
When you're designing the product and designing the regulation in parallel, it's amazing, right? And then just other aspects around the business environment, the access that you can get. There's less gatekeeping. The incentives obviously as well. So I think it's a pretty unique place to build, and there's obviously now a real influx of talent as well, more and more so. So it has all the ingredients to build some fantastic businesses here.
You mentioned the regulators. Who are SettleMint's regulators in the region?
Yeah, so we're not regulated. We don't do regulated activity. We're not. We're just a tech provider.
Yeah.
We're a pure tech provider. What we do is we provide the tech to regulated institutions. So they're the ones who do the regulated activity. Having said that, we come across, particularly the project in Saudi that you reference. We're working very closely with the regulators there because we're pretty hands-on with our client there, and I come across the regulators here in Dubai a lot. We also have projects in Qatar as well that you mentioned. So it's not just Dubai, right? It's the whole region. There's this kind of fantastic set of ingredients to build a great business.
And sticking with Dubai for a little bit longer, actually I saw a post today. Actually, it's a year since the first tokenized property happened. It was a post by Dr. Mahmoud Al-Baray. So we'll give another shout out to him for, again, pioneering. And the UAE has made a very kind of, I guess, calculated move on making it the hub of tokenized real world assets, specifically in real estate.
Yep.
But actually now in other asset classes, looking at gold, silver, diamonds, even, working with the guys at Control Alt. They're looking at different assets, but particularly from a real estate perspective, the UAE really has focused quite heavily initially on there. Whether or not they're still leading, who knows? And I think time will tell, but they definitely went first. What do you think, from a Rails side, it takes for the UAE and the ecosystem to really make this the hub, the UAE, the center of tokenized RWAs in the GCC region?
Yeah, so look, I think all of those centers will develop this capability and this market, right? And as you said, Dubai was definitely the first to go. And kudos to everyone that was involved in that. And, we'd love to see that. And we're sort of cheering that on. With Saudi, they took a different tack, right? So rather than go kind of through a kind of slightly smaller scale with a developer, in that sort of a controlled environment, the Saudi use case is building national scale through the government from day one. We are in discussions in Qatar as well about what their plans are, and similarly in Abu Dhabi. So I think what you're going to see is everyone's.
There's going to be some healthy competition.
Yeah. And that's fantastic too, right? And it's great for the industry, and everyone's going to learn from each other on how the journeys that they go on. I think ultimately what would be very cool to see and very possible is a kind of environment. Now I think we're talking 10, 20 years into the future. Maybe you and
crystal ball.
Maybe you and I won't be in these roles. Hopefully sitting on a beach somewhere at that point. But something that then becomes interoperable between them, right?
Yeah.
So if you have the same sorts of standards, this, both of regulation and technology, there's no reason to why you shouldn't be able to trade tokenized real estate across these markets, right? Not just within the markets. So,
100%. That's the goal, certainly for Tribe at the very least, but it should be the goal, regionally speaking. I suspect it won't work that way first, but it will work that way eventually. And hopefully we're there long enough to push that agenda as far along as possible. So let's go back to SettleMint for a little bit. Obviously, Tribe is an example, and for full disclosure, we don't yet work with SettleMint. Hopefully, we will at some point in the future. But fractionalizing an asset such as real estate on top of rails like SettleMint is an example of what is possible. But what are the best use cases or what are the best application layers that you've already worked with in the tokenization space? Because there's a lot of really unhealthy, or maybe a better word is shit, examples. What are the good examples that you've worked with, and also maybe if you have some bad examples you want to throw into the mix as well?
Yeah, sure. Look, so what we do is we provide tech to large institutions that build their own applications, right? So imagine a large bank in Singapore wants to tokenize some bonds. We would provide them the tech to that, but they build their own application. Right now, in the Saudi example, we're actually building the applications too, and that takes quite something, right? Because we have a partner that's working with us on that, a large IT company called Inspire for Solutions, who are a big kind of regional tech player here. Because you need to be able to understand the blockchain side of things, but then also build large-scale national, applications, sovereign grade applications, right? Like that's no joke. So it takes serious people, right? At the end of the day, it takes people who have the experience, kind of know how to navigate the technologies, know how to interact with those sorts of clients, understand what their needs are. When you're dealing with a large sovereign client, what they need, right? And what their expectations are. So it takes a lot. Now, that's not to say that again, I think there's space for everybody. What I still honestly see a little bit too much of is people who come into this space and they want to make a quick buck, right? There's still a lot of chains being launched where really the aim is just to pump the value of the coin attached to that chain, right? And so people can make money. For me, there's like the less of that we see, the better for the industry, right? Like that we need to leave behind. Like we need to now, take this amazing technology and put it to good use on actual real use cases that add real value to clients and society, right? That sort of cowboy phase of the industry, we need to leave behind. And look, I see more of the serious stuff and the real world utility stuff, but I still see people who are trying to make a quick buck.
So more moving towards value creation rather than hype cycles or hype creation, right?
Yeah, correct.
Previously, that's what has fueled the increase in perceived value, so to speak. Whereas in kind of real world application, the value is nothing but hype. And that doesn't say that hype doesn't make money. Oftentimes it makes a lot of money, but it can only be done, so many times or for so long before we actually have to start having substance.
Correct. Yeah.
So one of the things I wanted to talk about, obviously with SettleMint as this kind of tech or enablement layer, is that a fair way to put it?
Yeah.
A lot of plumbing goes into that, right? Whether that's compliance, governance, smart contracts, you name it. Obviously, all of the technical API integrations, whether it's with government applications. I mean, rather you guys than us in that respect. Applying that lens to, I guess, more of the startup environment. So ignore the government entities and the institutions, but looking at for a moment to the startup ecosystem, because this is why we're doing this, is to share our experience and help others, right? There's a lot of mistakes that we've made along the way, a lot of expensive lessons, and those haven't finished. There's going to be more. There's more bumps on the horizon, I'm sure. What are the kind of like the unsexy bits of the process that a lot of startups will ultimately die on their own sword? Is it governance, compliance, regulatory, adherence? What do you think are the biggest kind of trip ups or obstacles for startups building in this space?
Yeah, that's a great question. I think the big thing is, like you guys have done, find somewhere where you think you can create real value. Number one, right? If you're not convinced you can create real value, don't stop. Don't do it.
Don't waste your time.
Yeah, exactly. On your time, your money, other people's time, other people's money. That's number one. Number two, know who you are and who you're not, right? Like from our perspective, we're very clear. We're the tech provider. We're a great tech provider, but we do issuance and lifecycle management of digital assets. We're not a custodian. We never want to be a custodian. That's a completely different business model. The different business requires a different experience, another 10-year build. That's not who we are. There are great custody providers out there, right? You know them, I know them. Equally, we're not an exchange, right? Like we don't want to do market-facing regulated activity like we talked about earlier. So we're very clear, like this is the box that we play in, and we are very disciplined about that, and we want to stay the course. And I would say that there's a lesson in that, right? Sort of disciplined execution of a vision and a strategy, and stick to it, right? Don't get sort of distracted. Now, that's not to say that things don't evolve, right? So from a SettleMint perspective, the first 5 or 6 years of our existence, like we had a very broad blockchain as a service offering, right? So we came to market with saying, we're the best blockchain providers. You can trust us. What do you want to do? Right. And that worked at the beginning, and we had lots of great pilots and POCs with all kinds of massive institutions globally. But then we realized the market, where was the market going to go? The market is going to asset tokenization. And then actually, if you want to differentiate yourself within that, you need to not just issue the token or be able to issue the token, you need to manage the life cycle on chain and be able to do that at the highest possible grade. So that's how we evolved, right? So it's not that you don't mistake me. I'm not saying don't pivot or don't read the market, but have a clear vision, know who you are, who you're not, and then execute within that and pivot within that if you need to.
I think that's a great point, because when you raise capital, or at least try to raise capital, then there's a big stark difference between trying and raising capital, particularly in this market as an early stage venture, particularly where in a heavily regulated environment where it's a cost first model, where you have no choice but to pay the regulatory licensing fees, application fees, supervision fees, paid up capital. That's let alone building a product and everything that goes in between. You often get asked about competition and what you're building, who you're building for, but answering that question of who you're not, I think is just as, if not more important. And it's something that we didn't do well enough. Honestly speaking, in the first few months or first 6 months of our existence. But I think we began to realize, actually, yes, our focus is really narrowing. Alistair always uses the phrase inch wide, mile deep in terms of our initial focus. And certainly Seb has gotten us way better as a team at really aligning on who we are and who we are not, and being very comfortable with we are not this now, and possibly we're never going to be this either. And if an investor comes along and says, I'll give you loads of money if you're this, we say thanks, but no thanks.
Exactly.
It is easy to get swayed or confused or
and then look, suddenly you're building many different businesses and you're doing it really badly. Right? Like you're stretching yourself way too thinly. Like we have the largest banks in the world come back to it. At the beginning, 5-6 years ago, we'd have conversations with them and they'd say, thank you, but we want to build this ourselves, right? Like we're so-and-so bank, right? Fine. We stuck at what we're doing. And now guess what? Even if you're at that scale and you have those budgets, they're coming back to people like us and saying, actually, we've realized like it's really hard to do what you guys are doing and build and continue to develop in this space. Now it's a small piece of the puzzle, right? But so I think I see a lot of startups your stage, even later stage, who are shooting for the stars, which is great. But I worry that they have unsustainable business models that sooner or later are going to catch up with it, right? And that, so I think, really understanding the market, having a firm view on where it's going to go, and then what your place within that is going to be, and as you say, what it's not going to be.
Yeah.
Right. And then, by the way, for the bits of what it's not going to be, find the right partners, like in the way that you guys have, right? You've got your chain that you use. We know those guys well, and we're integrating their chain onto our platform too. We have a great relationship with them. There are others. You partner for those things. Can you imagine building the business that you're building and also running an actual blockchain?
No, I cannot. No, I can't. No, I don't want to either. Yeah.
Exactly.
And again, building a startup in the Dubai, startup ecosystem. A lot of people have this misconception that it's so glamorous. The capital just flows. Like, you just need to look at an investor and they'll write a check. Like, it simply doesn't work like that. It is one of the hardest markets, in my opinion, to raise capital from. The failure rate is astronomical, but it doesn't get reported in that way, obviously, for obvious reasons. So having that focus will enable you to either build the business that is revenue generative and you can bootstrap.
Yeah.
Again, bootstrapping in a business in Dubai is extremely hard as well, because it's such a front-loaded cost environment. Yeah. Or it will help you raise capital. And with investors, you can make it very clear, this is what I'm building, and give them a clear kind of line of sight from the beginning. And that, for me, is where a lot of the startups trip up, is they don't know who they are, what they're building, what they're not. Yeah. And then when it comes to having conversations with investors, well, it's no surprise that those investors have no conviction. Yeah, because the founder didn't have any themselves.
It becomes evident within 30 seconds.
Correct. And you've sat on the other side of the table.
Exactly.
At the venture, the venture arm of a bank. Yeah. So I guess that gives you an unfair advantage, or a competitive advantage, shall we say, in the sense that you understand from both sides of the equation.
It certainly gave me insights into how this technology was going to be adopted at scale, in the global financial system. So certainly had that insight. And then with this particular, with SettleMint, I had conviction very, very early, way before I even thought about joining, which also obviously helped make that transition. And then, I think the investors, we're very lucky. We have sort of top European VCs who are our core investors, with some others. They've been, they're very, very good at what they do, and they've been extremely supportive. So we've been, we're very grateful for the support that we've had. But it's not been easy, and we've been through our ups and downs as well. Yeah. And there were times when it was extremely challenging, right? Yep. So
yeah, 10, 11 years in building in this space is no mean feat.
Yeah.
Where is SettleMint domiciled? Like, where is it? What's the structure, if you don't mind?
Yeah, so it was launched in Belgium. So both Matthew and Roderick actually still sit in Belgium. Roderick, our CTO and the real sort of genius behind our product, is actually relocating to Dubai. Yeah, exactly. So it's going to give us even more sort of presence here. And then we have our local entity here in the DIFC. We've got legal entities and people in Japan, Singapore, and then sort of across Europe as well. So London, some other places in Europe. But we're a remote first company, so we're a sort of small remote first company, and as I say, got clients in those places.
All over the place. Yeah, I asked because, again, we talk transparently and openly about raising capital. Mm-hmm. Raising capital as a UAE-based entity from European or US investors is very hard. Yeah. There's still very few and far between. Yeah. Smart Bricks is one of those that have kind of broken the seal, if you will, and had some success and absolute credit to them, because someone had to. Yeah. But it's still so small in the grand scheme of things, and structuring, is one decision, one chess piece in a very long and strategic game of raising capital. And if you want to raise capital as a UAE-based venture from the US or Europe, it plays a significant part.
Yeah, because those guys then need to not just get comfortable with the technology, but they have to get comfortable with the jurisdiction.
Correct.
And understand this market, right? And unless you're really sitting here, or you're big enough to have teams that make investments in these kind of places, then it's quite hard. But I would say, I'm seeing an increasing amount of VC activity here. I'm also seeing more local capital finding its way into VCs, whether it's local VCs or international VCs. So I think the future for that is bright. But yeah, right now I can imagine it's challenging.
No, it's definitely it's definitely complicated, and it's one of the many elements of fundraising that I think founders simply do not recognize until it's too late.
Yeah,
you can't restructure mid-raise. It's a very costly, time-consuming process that doesn't really add value other than giving the investor comfort.
Yeah.
And you shouldn't be raising money to give investors comfort. You should be raising money to return, good multiples on that investor's dollars. So, which doesn't always happen, by the way. And again, the failure rate isn't publicized here. But I would imagine it's very, very, very high.
Yeah, and that's very high. The jurisdiction question, I think, is part of the who am I analysis, right?
Yeah. Or not, who am I not?
Yeah, exactly, right? So if you're, if you're building a business which you think is going to require investment, then choosing your jurisdiction where you think you've got higher chances of getting that investment, obviously, should be part of the analysis, right? The thing is, it may not always be where the opportunity is. So that's the thing, right? And
plenty of chicken and egg.
Yeah, exactly.
In part of that equation. You mentioned the future, so let's look forward for a little bit. As I mentioned, and Dr. Mahmoud coined the term Tokenization Day today, the 25th of May, when we're recording this. Specifically, I guess 2 questions: tokenization at large, and then the tokenization of real estate here in Dubai specifically. What are your views for the next 12 months? Let's just keep it at 12 months for now.
Massively bullish on both. So I think, we are just at the foothills when it comes to tokenization and the digitization of assets globally. So, we're seeing an acceleration now in the work that our existing clients want to do with us, but also new clients coming on board. So we've had really, really good growth over the last year. And I think that's a reflection of the market, as a whole. And then likewise, I think on the Dubai tokenization of the real estate side, I think it's, what you guys have done is leading the way. And now the question is, can these markets scale, right? That's the real question, I guess. I assume, though I don't want to assume, not knowing your business well, it's about creating value on the supply side and the demand side, right? And once you can start to demonstrate that the value that you're creating there, I imagine this is going to scale, because the underlying fundamentals of the market are not going to change, right? That's positive. The regulatory picture is only going to get clearer and more supportive, right? Particularly, obviously, given recent events. I think that my view is it's going to be a very big snapback.
Yeah.
And, if anything, there's going to be an acceleration, right? In tokenization generally, but also specifically in the real estate sector, which is obviously a huge part of Dubai's economy, right? So, no, I'm excited. I think there's we're just at the beginning. We're starting to see these use cases, real use cases, real utility, real value creation coming to the fore, and it's just the beginning. And there'll be more and more, and we're seeing it here, in the banking sector too, right? The big banks here are now moving.
Yeah, they're going for it, getting licensed, getting ready.
Yeah. So no, it's exciting times to be here.
And what about SettleMint? What's the next 12 months, for you guys here regionally or globally? What's your, what are you most excited about?
Yeah, so it's kind of more of the same. So we set out a strategy about a year ago that we're executing against, and that's disciplined execution. Like, we think we have the best tech stack of its kind in the market. The market moment is now. There's this inflection point. It's really about growth, right? So we're excited. We're growing in all of the regions of the world, and we want to pick up and support quality clients, and help them on their journeys to adopting this awesome technology. So that's what we're focused on.
And if by any chance someone in that space is listening, who are the kind of people that you want to work with or hear from?
Yeah, so we focus on sort of the larger businesses, so businesses and institutions, large banks, large public sector institutions, large asset managers, large financial markets, infrastructure providers. We tend to focus on the larger clients because our model is to provide them with tools for them to build themselves ultimately. So that's who we
Tools
support.
and resources, it sounds like.
Yeah, tools, resources, know-how, but it's really the tech.
Yeah,
is really what we focus on. Yeah, there used to be a lot more consulting, and now it's really just it's really the technology.
Awesome. And then my final question, which is the same final question to everybody that joined us on Block by Block, is obviously the purpose of this podcast is to again be open about our journey, building, when we get it right, when we get it wrong, some of the opportunities that we've grabbed, some of the hurdles that we've tripped over for Tribe building in this space. And you said you don't know our business model, but I think you have a good enough grasp. What do you view as being the biggest opportunities and obstacles for us in the next 12 to 24 months?
Yeah. So again, my understanding of where you guys are at, like you've got a sort of, amazing sort of proven concept. Now the question is, can you scale that? Right. And again, I go back to, I think what that means is, can you prove value to the supply side? So all those developers that you're, trying to get their properties onto your platform and then can you provide value to the investors, right? So I would have thought you're at the point in your journey where that sort of proof of value becomes really important, and that will then also help you scale, right? As the market becomes more and more receptive, more and more open to this, having those value proof points really helps. I mean, same journey that we went on, right? Like we needed to do something at a certain scale in a certain sort of relatively controlled environment, prove the value, and then you can go from there, right? I may be way off, but I imagine that's kind of where you guys are.
Whether you are or you aren't, it doesn't matter. That's the point. We'll look back in 12, 24 months time and say who was right, who was wrong. But, I think ultimately proving value to our, investors is the ultimate measure of success, right? If we've got the asset selection right, the entry point right, the liquidity layer right, then those investors will be happy. They'll keep their money in, or they'll take it out and recycle it.
Yeah.
And if we don't, they'll try and get their money out as quickly as can and move to a different platform, and rightly so.
Yeah.
And that's something we've always been very open, honest, transparent about, is that we're here to make the best possible asset selections we can.
Yeah.
Obviously, tokenization is the method of entry, or the way in which you invest, as opposed to whole direct ownership, be the alternative, or crowdfunding. But, we must never forget that crowdfunding is, was and will remain an option.
Yeah.
Obviously we're biased. We believe tokenization is a more efficient and effective pathway for investors, but proving that value is critical, and it's either our biggest opportunity or our biggest obstacle. So I think you've asked it very well. So we'll look back in 12 to 24 months and see, right, who was right and who pointed out those trip ups and how did we avoid them. And again, that helps, right? We're learning from experts, people that have trodden the path before us, got some battle scars of their own.
Yeah. No, and I commend you for doing that, as you guys call it, sort of building in public. Super cool, right? Like very, very difficult to do. Has its pros and cons, I'm sure. But probably more pros, right?
We hope so, yeah. I mean, we might look like idiots, in 6 months' time, but hey, we'll place our bets, and we'll hope we don't. But at least we've worn our heart on our sleeve, and we're doing what we said we would do. If we get something right, we get something right. If we get something wrong, we get it wrong, but we say it how it is. So
Yeah, exactly.
So yeah, and that's gotten us to be able to sit down with people like yourself who are experts in their field, who have built great businesses, seen a lot, experienced a lot, and it's an honor and a pleasure for us because we get to learn.
Yeah.
And if we don't, the minute we stop learning and think we know it all, that's when we fail.
Absolutely. And looking like idiots, I think, is part of the entrepreneurial journey, right? That's
Absolutely.
we all have to go through. We all have to go through that. Yeah.
Yeah, we do. Adam, thank you so much for joining us. We're a big fan of the work you're doing and SettleMint, what they're doing. So keep it up. Keep paving the way for us to follow, and hopefully we sit down again in 12 to 24 months time and reflect on all of the successes.
Perfect. Thank you so much for having us. It was a pleasure.